welcome to Sectors Up Close. I'm Angeline Ong. Our focus today is on US retail stocks, and our guest is Jerome Martis, Refinitive's Director of Consumer Research. The US retail environment is in flux. Retail sales last month unexpectedly rose despite slumping consumer confidence. Much of the increase was driven by online sales, which offset a continued decline at auto dealerships. Retailers are being hit by the rise in coronavirus cases and serious inventory issues caused by the chip shortage and supply chain problems. But Americans are still sitting on $2.5 trillion in excess savings stashed away during the pandemic, meaning there is still the potential for retailers to cash in. There are a variety of indices and funds that track this sector. This is the Refinitiv Global Retailers Index. It's had a somewhat bumpy ride and is up around 10% this year, but has outperformed other sectors, including financials and technology this month amid a broad decline in asset prices. But this is a sector dominated by one company, and that is, of course, Amazon. Its $1.7 trillion market cap is 40% of the 389 companies that make up this global index. So how can investors navigate this sector? Let's ask Refinitiv's Jerome Martis. Thank you so much for joining us, Jerome. Your research suggests you are quite optimistic about the outlook for the sector in the near term, but the landscape, of course, is changing. People are flocking back to bricks and mortar as vaccination rates rise. How will this change your forecast?
Well, currently, Refinitiv is looking at a 23.6% growth for the third quarter, and this is expected to continue to grow even further into the holiday season at 28.6%. Mainly, the consumer has become very value-oriented, and the discounters are driving a lot of this growth, especially given that the fact like a company like Target gained so much market share during the pandemic. It stole a lot of the market share from the department stores and has now become a one-stop shop. Target is the retailer that most of the consumers go to for either drive up, if they want to have contactless shopping, drive up, or Target has done everything possible to give the consumer the capability of shopping in a fast and efficient way, whether it be pick up in store or have it delivered to their house. So we're seeing that the discounters are the strongest one going into the holiday season, given the psyche of the consumer being so value oriented right now.
Are the discounters going to be the stronger of the pack too, seeing we're coming to the end of unemployment benefits?
Absolutely, especially given the dollar stores. The Refinitiv outlook shows that the dollar stores are expected to post stronger numbers even than the pre-pandemic levels going into the third quarter and the fourth quarter, especially given that the strong demand they have from the low-income consumer that is no longer going to traditional grocery shops, but instead is going to the dollar stores for groceries.
And aside from Amazon, which makes up such a huge amount of the retail space, which types of retailers, other than discounters, are in a stronger position going into the fourth quarter?
So based on the latest reading in retail, it's very clear, that the pandemic is still having a strong effect on the consumer, especially because the second biggest gain that we saw was in home furnishing right after non-store sales. Non-store sales just tells us that consumers are gravitating online instead of going in person to the stores, but they are purchasing a lot of furniture, and also they're doing a lot of home improvement in order to improve the stay-at-home experience, suggesting that they still expect to be at home for some time. Even when we look at restaurant and bar sales, those were flat, and instead groceries were up in positives, suggesting that consumers prefer to cook at home as opposed to eat out. So we're seeing that not only the discounters, but the home furniture and things that still make the consumer very much comfortable at home, like even Crocs, shoes that are very comfortable, are the ones that are expected to do well.
And for investors wanting some exposure to this space when they haven't already, what would be your top picks?
So there are two companies reporting this week, Stitch Fix and also Nike. According to our StarMine data, investors could expect positive surprises from Stitch Fix. Also, Nike is doing a very good job in mitigating a lot of the supply chain issues that we're seeing globally right now, and is expected to see revenue up 18%. Not only is North America expected to continue to do well, but also Asia and Europe are expected to see double-digit growth. Home improvement sector is expected to continue to see strong revenue, the discounters. And in general, we like Lululemon as well because the athleisure trend is still very strong.
Right, thank you. We have to leave it there. That was Jerome Martis, Director of Consumer Research at Refinitiv. Now, before I go, here are some of the top stories in the consumer and retail space. U.S. auto safety investigators said on Tuesday they've opened a probe into 30 million vehicles built by nearly 24 automakers that have potentially defective airbag inflators made by Takata. The National Highway Transportation Safety Administration opened an engineering analysis into 1,384 models made from 2001 to 2019. Over the last decade, more than 67 million Takata airbag inflators have been recalled in the US and 100 million worldwide, in the biggest safety recall in history on concerns the inflators could explode. There have been at least 28 deaths worldwide. British home improvement retailer Kingfisher reported a 62% jump in first-half profit as it rode a do-it-yourself boom during the pandemic. But the owner of B&Q in Britain and Castorama in France said it was seeing higher than normal cost price inflation from raw materials and freight costs. CEO Thierry Garnier told reporters supply chain disruption was worse than where it was in January and said stocks of timber, cement and other products was below target. And that is your roundup of the retail sector. I'm Angeline Ong and this is Reuters.